Good morning, ladies and gentlemen. Welcome you all to the 27th annual general meeting of Ramco Systems Limited. This meeting is being conducted through video conferencing as per the circulars and notifications issued by SEBI, Securities and Exchange Board of India, and MCA, Ministry of Corporate Affairs in this regard. Company has facilitated the members to join this meeting using TSL platform from various locations. Now I request Chairman Sir to chair the meeting and introduce the directors and other attendees. Over to you, sir.
Good morning, everybody, and I'm glad to be here for the 21st or for the annual general body meeting held on the 21st August 2024. And I have the pleasure to introduce our directors. I'm pleased to welcome Dr. M.S. Krishnan and Dr. Arvind Srinivasan, who have joined our board as independent directors, effective from the 7th of February 2024. I also would like to thank Mr. M.M. Venkatachalam and Mr. R.S. Agarwal, who have retired as independent directors effective 31st March 2024. I thank them for their valuable guidance and support. I also would like to introduce our directors, Justice P.P.S. Janathan Raja, independent director and chairperson of the Audit Committee and Nomination and Remuneration Committee, Mr. A.V. Dharmakrishnan, non-executive director, Mrs. Saundara Kumar, independent director, Mr. Shankar Krishnan, non-executive director, and Mr. P.V. Abhinav Ramasubramanian Raja, whole-time director. So this is all the directors are present. And I will also like to now introduce the other attendees. We have with us Mr. Sundar, our CEO, Mr. Sandesh Bilagi, our Chief Operating Officer, Ravikula Chandran, our Chief Financial Officer, Mr. Vijay Raghavan, Company Secretary and Compliance Officer, Mr. K. Srinivasan, Partner, Statutory Auditors, Mr. Chella Krishna, Partner, and Mrs. Madhura Krishna of the audit internal auditors, and Mr. K. Sriram and Mr. R. Shivasubramaniam, partners in our secretarial auditor firm. I now confirm the forum. The quorum for the meeting is mixed at 30 members, and we have the required forum.
Thank you, Chairman, sir.
Yes.
Members may please note that the e-voting process has been explained in the 27th AGM notice. 12th July 2024 is the cutoff date fixed by the company for dispatch of annual report. For those persons who acquired shares after the date and holding shares as on the AGM cutoff date, that is 14th August 2024, the AGM notice and annual report was mailed out to them individually. The company had provided remote e-voting facility through CDSL to all the members who hold shares as on cutoff date 14th August 2024 to vote on the resolutions to be considered in this 27th AGM. The facility for remote e-voting was remained open from Sunday 9 a.m. 18th August 2024 till 5 p.m. on Tuesday 20th August 2024. The facility for e-voting has been made available to the members at this meeting also. Members attending the meeting through VC and who have not already casted their vote, they cast their vote by attending this meeting. Those who already casted the vote can attend this meeting but shall not be entitled to cast their vote again. Any votes cast by a member through e-voting available during the AGM, and if the same members have not participated in the meeting, the vote shall be considered as invalid, since the facility is available only for those members who are attending this meeting. Members may also note that 27th AGM notice was circulated to the members along with the annual report containing the board's report, corporate governance report, business responsibility and sustainability report, management discussion analysis report, auditor's report, financial statements by email. Hence, the same may please be taken as read. The independent auditor's report issued by Jagannathan and Krishna Swami, Chartered Accountants, Statutory Auditors, and second audit report issued by Krishnamurthy and Co. Company Secretaries are unqualified and unmodified and does not have any adverse remarks. The said reports were already circulated to the members along with the annual report. The same may please be taken as read. Statutory registers documents for members view as required under the Companies Act 2013 and a compliance certificate stating that company has complied with the SEBI share-based employee benefits and sweat equity regulations with respect to implementation of its stock option plans and schemes or available electronically for inspection. Members seeking to inspect the same may please send the request to vijayaraghavan.ne@ramco.com. I now request Chairman Sir to deliver the speech.
Good morning, everybody, and I welcome you all to the 27th Annual General Body Meeting of Ramco Systems. It is with great optimism that I share the progress of Ramco Systems has made since Mr. Sundar has joined as CEO in July 2023. Ramco Systems is witnessing the beginning of a turnaround with several positive developments across our operations. We have been working relentlessly to strengthen our core operations and seize new growth opportunities. Our strategic initiatives and investments are already yielding promising results, setting the stage for a bright future. We are committed to fostering a culture of operational excellence, customer satisfaction, and business agility. One of the most significant milestones this year was the launch of a modern SaaS-enabled platform called Ramco Pace. This game-changing cutting-edge platform exemplifies a focus on innovation, modernization. It offers best-in-class AI-enabled experience with an easy-to-use and rich user interface. At Ramco, we are fostering a culture of operational excellence, customer satisfaction, and business agility. We have undertaken comprehensive transformation and modernization programs across the organization. We inked strategic partnerships with leading industry players to expand our market reach. Notably, we have also secured prestigious logos to our clientele, a testament to our growing influence in this critical market. A focus on 5 key areas of excellence: operations, financial, product, and technical and customer satisfaction is driving our ongoing transformation journey. By prioritizing high quality implementation, consistent support, and comprehensive managed services, we are building lasting partnerships and ensuring ongoing client satisfaction. Our strategic financial management is laying the foundation for sustainable growth, even as we navigate industry complexities. Our commitment to innovation is keeping our offerings stable, reliable, and addressing evolving client needs. The highlights for the year. Order booking for the year was $75 million, showing a drop of 17% over the previous year of $90 million due to stringent deal qualifications criteria and market slowdown in some geographies. Revenue for the year was $64 million, showing a marginal increase of 3% over the previous year of $62 million. Net loss for the year was $29 million, up from $26 million for the previous year, mainly on account of provision for doubtful debts by $7.7 million. EBITDA after 7 quarters, EBITDA turned positive in quarter 4. Borrowings, cost optimization measures, and better cash management helped repayment of the opening borrowings of rupees 38 crores, thus making the company debt-free at the end of the year. Order booking. Decline in order booking could be attributed to some key aspects: delayed decisions, prospects moving the deal decisions to subsequent quarters, deal review process. To better align with our deal review process, we have chosen to step away from deals that don't meet our refined criteria of size, product segment, our market focus. As part of our ongoing transformation, we have strategically repriced certain deals to better align with objectives. These actions are deliberate steps in a broader turnaround strategy aimed at strengthening our position and driving long-term success. We added 25 new customers. Of the order booking of $74.65 million, HRP contributed 44%, aviation and defense contributed 42%, and the balance by ERP. Asia attributed to 42%, USA 15%, Europe 14%, and the balance other geographies. $11 million plus deals were closed during the year against $11 million plus deals were closed during the year as against 19 deals during the previous year. Unexecuted order book at the end of the year was a healthy 188 million. Last year it was 195 million. Revenue was up by 3%, driven by significant increase in license revenue, 11 million versus 9.48 million. Global reach and expansion continued. Revenue contributed by the non-Indian geographies stood at 76%. Human resource planning contributed to 40% of the revenue, and aviation and defense contributed to 33% and 27% by ERP. The proportion of our cloud-based SaaS revenue was 57% of overall revenue. It was 55% the previous year. Recurring revenue per quarter touched 10 million plus from 8 million in 21-22. Geography-wise, the APAC region was 38% of revenue, US 26%, India 24%, and the rest from other geographies. More details on geography-wise and SB-wise revenues are as follows. Business performance, SBU-wise. Payroll. Through innovative partnerships and insights, we are creating lasting value by redefining the employee experience and driving payroll innovation. Launched a revolutionary platform-based payroll software, PACE, with features like quick implementation, real-time monitoring, intuitive UI and analytics. We forged transformating partnerships with leading partners like Deloitte and BDO in India for world-class global payroll and HR solutions. And we shaped strategic roadmaps for innovative solutions addressing evolving needs in employee management, HR, finance, and technology. Aviation. Our aviation vertical witnessed remarkable achievements, solidifying a position as a trusted technology partner for leading aviation organizations worldwide. Strategic partnership with Korean Air for the digital transformation of their engine maintenance facility. Successful deployment of a comprehensive suite of solutions at Philippine Airlines were the highlights. We accelerated deployment at AI Engineering Services Limited, following hive-off of Air India, showcasing quality, agility, and commitment to customer success. In the ERP segment, in the ERP domain, we secured significant deals and expanded our reach, creating lasting value through operational efficiency and growth. We closed a landmark deal with leading conglomerate in cement for streamlining cement and RMC businesses, implemented solutions in the EV subsegments like heavy commercial vehicles, three-wheelers and tractors for a prominent automotive group, secured orders from real estate developers, port operators, wood products manufacturers and facility management services companies internationally, and solidified position in the EV segment with a deal from EV battery manufacturers. Logistics. The logistics domain, our initiatives created lasting value through operational excellence and customer satisfaction. Secured two multi-million-dollar deals in Australia and Indonesia, implemented TMS, WMS, and finance solutions for large 3PL customer in Australia and major retail customer in Indonesia within 8 months successfully. Achieved contract renewals from a large European player and significant 3PL customer reflecting improved customer satisfaction. Technology update. We are currently modernizing our technology platform. The rich IP has successfully served us for over 20 years. Investments in R&D to modernize the same are in progress. The ongoing upgrades aim to enhance productivity, user experience, and improve performance and scalability and sustain stability for the future. Overall results at a glance. Loss for the year was higher at 29.41 million US dollars compared to US dollars 26 million last year. This was mainly due to provisions for doubtful cases 77.7 million, claims and contract provision 3.1 million, forex fluctuation loss by 1 million, and lower deferred tax credit by 1.5 million, offset by reduced employee costs of 5.6 million and lowering of outsourcing by 1.9 million and consultancy by 1.0 million. Cost optimization measures and better cash management have helped repayment of the opening borrowings of 38 crores, thus making the borrowings nil at the end of the year. Utilization of the proceeds of the professional issue of equity shares and warrants. The entire proceeds of 130 crores received from preferential issue of shares and warrants has been utilized towards the objectives of the issue. Repayments of loan 95 crores, selling and marketing 10 crores, CapEx including R&D 20 crores, general corporate purposes 5 crores. Pursuant to this, shares were issued to Ramco Industries Limited for 45 crores, Attuned Capital and Vanderbilt University for rupees 75 crores, warrants convertible to equity shares issued to Mr. P.R. Venkatramaraja, promoter, were exercised by him, and shares allotted in July 2024 upon receipt of balance of 30 crores out of 40 crores. Diversity and culture and human resources. Focus on people and culture related initiative continues. The average age of the workforce stood at 33 years. The head count stood at 1853 as of March 31st, 2024, which was 2070 as of 31st March 2020. A global workforce from 20 different nationalities include Americans, Filipinos, Indonesians, Singaporeans, Chinese, Australians, and other. An equal opportunity employer with 37% employees, contained employee attrition to 18% from 25%. Employee wellness programs are continuing and continue professional training to employees. 900 plus programs are being continuously conducted. Awards. We were conferred as a Philippines Dream Employer of the Year 2023 by the Employer Branding Institute and the World HRD Congress. Honored with the Best Workplace Diversity Award at HR Tech Summit and Awards 2023. Recognized with the ET Edge Employee Excellence 2023 Award. Won the Most Innovative Company of the Year Award at the Asia CEO Awards 2023. Recognized by Economic Times now as one of the best organizations for women. Outlook for the financial year 24-25. We are actively driving our growth plans through continued modernization and transformation by prioritizing customer experience at every touch point. We empower our teams to deliver excellence in performance. This unwavering commitment to customer centricity, coupled with strong organizational discipline and relentless pursuit of innovation, will ensure that we stay ahead of the curve. I sincerely thank our investors and shareholders for their continued trust and confidence in the company. We are grateful to our board of directors, partners, bankers, and other stakeholders for their undeterred encouragement and support. I would like to take this opportunity to thank our deeply committed employees across the organization for their unwavering faith, hard work, and passion to the organization's vision. The commitment from the employees has helped Ramco systems remain resilient. I also thank the CDSL team for helping us host this meeting. Thank you very much.
Thank you, Chairman, sir.
So now we have the question and answer session, yeah?
Yes. Company has created necessary arrangements for a two-way communication in this meeting. Members desirous of expressing their views are requested to register themselves as a speaker shareholder at least 3 days before the date of this meeting. Those persons who registered counts to 4 and they are allowed to speak now. Shareholders, the speaker shareholders will be called sequentially and each shareholder will be allowed to speak up to 3 minutes. CDSL will unmute the audio of the particular shareholder to enable them to speak. In the queue, the first speaker shareholder registered is potential partners.
Hello, sir. Potential partners has not joined the meeting, sir.
Fine. We can move to next person. The second registered shareholder is Svecha Jain from ANS Wealth. Svecha Jain.
Same, Sweta Jain is also not joined, sir.
Fine. The third registered speaker is Rahul Mehta.
Yes, sir. Rahul is present. Like, just a minute.
Please.
Rahul, you're online. You can just unmute yourself and you can ask the question queries.
Thank you so much for the opportunity and congratulations for excellent set of numbers and turnaround story. Thanks a lot to the Secretariat Department as well for giving me this opportunity. My question is to CEO, sir. In the last Q1, we had the top line of 137 crore. Out of how much would be the portion of PACE? And what is the current order book situation specifically for the PACE? Thank you.
So I'd like a CEO to or Chief Operating Officer to take that question.
In terms of whatever, PACE is a modern platform, but it is a modern platform which is the new next version of the existing HRP platform. So whatever you have seen as part of the HRP revenue contribution is the PACE contribution. And so that way we don't really differentiate any time between the PACE and the HRP revenue. It's all the same revenue. The newer implementation they are on the PACE platform. So that way it is fairly intact, and we said it's around some 44%, and that continues to be intact. So there is no differentiation there. And second, in terms of the order book, in terms of the PACE per se, currently the current order book is we have around 188 million, and we don't have that segmentation at this point of time. It's around close to 90 million. Roughly, we can say around 50% of what we have is around PACE, which is our HRP platform, and the rest both from the AAD and the ERP.
Thank you, sir. And we have a strategic tie-up with General Atomics for the aviation sector. Are we in talks with any other players, or are we trying anyone in India? Because India is going towards the Atmanirbhar Bharat, and I think our company must be pitching to the Indian defense companies as well. So, are we in progress to any of that story?
Yeah. So we have been talking to a lot of our prospects, and our work with the General Atomics have really further solidified our position. And these are at very different stages. So I think over a period of time, once these results really come out, then we will let you know. At this point of time, what the work that we are doing with General Atomics and also the recent win that we have had with Transport Canada, which is essentially a defense of Canadian government, has really positioned us well. So we are very well positioned for the upcoming opportunities in India at this point of time. Have I answered your question, Rahul?
Yes, sir. Thank you very much. And the last question is, we have been EBITDA positive. When can we expect to be a PAT positive?
We don't have a time frame there, but the progress is in that direction.
All right, sir. Thank you very much, sir.
Thank you.
Thank you, Rahul. The next speaker, shareholder, ratio is Dhruvesh Anil Sanvi.
Sir, Dhruvesh is not available now, but Prudential partners are joined. Can I enable them?
Please.
Prudential partners, you are online. Kindly unmute yourself and you can ask the question.
Can you hear me, sir?
Yes, audible.
Yeah, thank you for the opportunity, sir. Sir, I have a few questions. So, if I heard you right, you said that out of 180 or $190 million order book, 50% is from PACE, right?
Yeah. Yes.
Okay. And sir, my second question is, so if you can briefly tell us that was there any instances in the last year where any of our clients shifted away from our software to any of our competitors' software? And in Ramco Pace, how much amount we would have invested in developing the upgraded version of the payroll software? And so we have mentioned that we have done new partnership with Deloitte and BDO. If you can help us understand what percentage of revenue would be coming from such partners across the geographies, and sir, you've also mentioned somewhere in the annual report that we've seen healthy growth in recurring revenue streams and cloud subscription orders. So if you can help us understand what percentage of our revenue is of such recurring nature. Also, sir, we have an intangible asset of around 360 crores in the balance sheet. So, how much more do we intend to spend in next 2 to 3 years in product development? If you can give us some guidance on it. Sir, our employee cost reduced from 340 crores to 306 crores, and also employee count has reduced this year. So, what is the primary reason for this, and where do you think it will reduce further in coming years, or it should stabilize around this level? So one main reason for our profitability or the loss is the bad debt provision, which we did 128 crore this year and 65 crore last year. So if you can just brief us, what was the main reason for this bad debt provision that we had to do? It was a particular geography or particular customer, and is there anything else on the receivable side that we'll have to provide? And we also provided for some customer claims and customer obligations of 15 crore each, so totaling to 30 crores. So again, is this one-off, or is it something which can, come up further? Yeah, these are my few questions, sir.
You have given us a question paper, so we will answer one by one. Okay. In terms of I answer few, and I'll request my CFO to answer few, and the COO to answer few, and so we'll take it up. Not in that the order that you gave us, but let me answer the first question first, which is the attrition is in terms of customer attrition is well within the industry norms. It's at about 10%. And we have seen the customer shifting from us to competing product. I don't know. Sometimes it is also one is sometimes they want to shift because they think that's the right thing to do. And some of the customers or the multinational customers, the headquarters make a decision that, hey, let us really use this platform across the world. Then there is a shift that really happens. But that is very, very well within the industry norms. It's at about 10%. Having said that, we are also equally gaining, or maybe more than that, in terms of the customers moving from other platforms to us. So to that extent, we are pretty safe there. That is with respect to the customer attrition. The second thing you asked about the recurring revenue growth, which is around at this point of time, the cloud revenue is at about 57%, and that is predominantly recurring revenue. And if you've seen the last few years, it has been traditionally going up in terms of the cloud revenue that has been going up, and that really helps us to sustain that the healthy revenue growth. So what we've been with the new orders and the enhancements that is one, then the subscription-based revenue has really gone up significantly. And in fact, the cloud subscription-based revenue, it is not only with the HRP segment. If you really look at it, we have converted some of the ERP customers into the subscription base. That is really helping us. And even some of the aviation customers. For example, we talked about the General Atomics. I think that question came out with General Atomics. And that is purely on the drone basis. It's on a subscription basis. So there is a healthy shift from the license to the subscription model, but different industries move at different paces. So we are really aligning to that. So that is on the subscription revenue. That's number 2. The third one is that you asked about the Deloitte and the partnership with respect to Deloitte and BDO partnership. See, it is a very strategic partnership with respect to the PACE platform, which is the HRP, the People Implementation. And these partnerships do take a long time to really mature because the message should really go to all the partnership organizations that are across the world. So having said that, we have in the initial stages, we have won few deals from some of the through Deloitte and BDO. We don't want to exactly name the customers from who we have really won. We have won those deals. We are in the process of implementation. While we have won few, we are also in the talks with the different customers, our customers and their customers in terms of the newer deals. So that's showing a lot of this thing. The pace has been really new. It was launched sometime in February of this year. The partnerships were launched sometime in April of this year, and we are in the month of August. So you can expect in another 1 year, this will really grow legs and start moving at a good momentum. At this point of time, if you ask us what is the revenue that you are going to get through this channel, we don't have an answer right now. And I think we will have some kind of an idea maybe a year from now, not today. And the employee cost reduction is, we did 2 things. One is that it is mostly with respect to the headcount reduction. So when we do, see, there was a during the COVID, there was a boom in the IT sector. We won a lot of deals. So we hired a whole lot of people. And that is one thing we thought there is one way is to really look at how do we really look at the set of people that we have and optimize it so that we can really, improve the productivity and get the existing people to deliver that work. So that was across the board, the headcount reduction that really happened. That is number 1. Second thing that is very important is that there is something that you learned in the IT industry is that the headcount swap. You primarily lose a senior resource. That is an attrition. For example, if the senior manager quits, you replace that senior manager with the junior manager. So the headcount doesn't really change, but the cost has really changed. We have really done that. So these 2 things across the board, we did the employee optimization across the organization, and which is both here at offshore in India and also at our customer sites, and that has really helped us. So and at the same point of time, we have to also reduce the bench cost. At the same time, we have also added a lot of people with a different skill list. Once we get into the modern technology, modern platforms, and as we put a lot of new deal qualification process. We built a lot of processes around the organization. We also understood that we need to bring newer skills into the mix. That has also happened. So there is a holistic change on the employee pyramid, the way if you really look at it. And that has also helped us to bring down the cost. At the same time, upskill the employees. We have done both. And that's an ongoing process. It's not going to be done in 6 months. It's an ongoing process. And I think next 1 or 2 years, this will continue. At the end of that time, we will have a much healthier organization with good skill set. I don't know what else. Can you?
Yeah. On the R&D question, see, we will be investing, we'll continue to invest. Investment would be in the range of around $8 million per year, US dollars, roughly around 60-70 crores minimum per year. And on the provision, we have made it's a one-time provision. We have made a strategic review of all the accounts, receivables, and unbilled revenue. And we have made a one-time cleanup. We have made a 15.1 million in Q2 of this current year. And however, as per accounting requirement, we will keep on reviewing this periodically, and we are continuing to provide the provision based on the expected credit loss method, which will be around $500,000 per quarter going forward. And on the customer claim, also it's a one-time provision. In fact, we will be making the payment. So there's a one-time claim. So have I answered all your questions?
He is on mute.
Yeah, yes, sir. Thank you. Thanks for all the answers.
Thank you.
Thank you, Dhruv. So Karthik, I hope the rest of us has not joined. We can move forward.
Yes, sir.
Yes, we can move forward.
With the permission of chairman, now I'll take up the resolutions proposed for this meeting. Totally, there are 3 resolutions proposed to be passed in this 27th annual general meeting. First 2 are ordinary business, ordinary resolutions, and the third item is a special business, special resolution. Item number 1, adoption of accounts. Standalone and consolidated financial statements of the company for the financial year ended March 31, 2024, together with the report of the auditors thereon. Resolution number 2, retirement rotation and reappointment of Mr. Sankar Krishnan as a director. Bid number 01597033. Resolution number 3, special business, special resolution. Reappointment of Mr. P.V. Abhinav Ramasubramanian Raja as a director and whole-time key managerial personnel in the position of manager with resignation as whole-time director for a period of 3 years from June 4, 2024 till June 3, 2027. Voting for these resolutions are in progress and the said window will be open till 15 minutes from the conclusion of this meeting. Now I request Chairman sir to inform about the scrutiny, sir.
I request the scrutinizer, Mr. K. Srinivasan, Chartered Accountant, Mrs. Jagannathan and Krishnaswamy, Chartered Accountant, to submit the combined results and report of the e-voting to me and the Company Secretary, and to submit to the stock exchanges within 2 working days from the conclusion of this meeting. And any other questions?
The
If
floor is
not-
open for a vote of thanks.
So I would like to thank all the members for attending the 27th Annual General Body meeting. And I also thank our directors and our management team who have supported this company through this year. And I also request their full support for the coming years. And all the shareholders who have taken the time to attend this meeting. I also like to thank CDSL for hosting this meeting. Thank you very much, and I conclude the 27th Annual General Body meeting.
Thank you, Chairman sir. Thank you all others for your participation.
Thank you.
Thank you. With the permission of chairperson, we are concluding this meeting. Thank you all
Thank
for
you.
joining.
Thank you.
Good day.
Thank you.